NIO Stock defied the overall market last week and ended up higher. Why is that so? Why are stock market investors willing to keep buying this stock while selling off other shares? After a rapid sell-off in the overall market, NIO Stock seems to have stabilized and is continuing its journey upwards. How much higher can the stock go up in the near to midterm? And what are the factors which are driving the positive momentum for the stock? How soon can the stock hit $100? This is what we will explain in today's NIO Stock Analysis video. Before we start, folks, don't forget to hit that subscribe button. For the latest quarter, NIO sales surged 154% compared to the quarter from a year earlier. For an automaker to be able to achieve such a sales surge is by itself an astonishing fact. Added to that, NIO beat its own sales estimate and delivered 12,206 vehicles for the third quarter of 2020. Even on a quarter-to-quarter basis, NIO was able to deliver almost 25% more vehicles, easily beating 2020 second quarter deliveries. It is becoming abundantly clear that NIO will keep on increasing its sales from quarter to quarter, thereby cementing its position as a leader in the Chinese EV market, trailing only Tesla. In September, NIO launched the highly anticipated new EC6, a sporty crossover that will surely sell very well in the local market. This will be a high-margin product targeted towards a younger demographic. The company seems to have a good pulse on the market, being able to understand consumer taste and preferences better than any other automaker in China. Investors in NIO stock need to understand that NIO designs its product lineup almost exclusively for the local Chinese market, therefore being able to quickly adapt to local market changes. Although NIO expects to expand to the European market, it is firmly committed to China being its primary sales driver. Another important financial event that took place recently was the company's capital raise of approximately $1.5 billion, which took place in August. What investors need to understand is what the company plans to do with this fresh capital injection, because it will have a positive effect on NIO stock price. If you recall, at the beginning of 2020, when the company was running low on cash, it struck a deal to receive a cash infusion of $1 billion from a local government fund. But in return, it had to place all of its China-based assets into a new subsidiary called NIO China. The state fund ended up owning 25% of that new subsidiary. It was a tough choice for NIO, but the management of the company had no choice, as the company was running out of cash and had to act quickly to save the company from insolvency. From an investor's perspective, it was a smart choice at the time. With this new capital raise in August, it will use $1 billion out of that $1.5 billion to invest in and buy some shares of its new subsidiary, NIO China. The company's stake in NIO China will go from 76% to more than 86%, a great deal for us investors in the NIO stock. What this all proves is that William Li, the CEO of NIO, is a smart negotiator and knows how to cut deals that are in the best interest of us shareholders. NIO just recently completed some tweaks on its production line, which will allow it to increase its monthly production capacity from 4,000 vehicles to 5,000. That was of course done without any major factory expansion. What it means for us investors is that the company is instantly able to deliver more vehicles, increasing its sales even further. Now, you need to remember that NIO CEO has recently stated that the company is working to triple its production capacity by the end of 2021. Which means that the company will be able to manufacture almost 200,000 vehicles on an annualized basis by the end of 2021. We also need to keep in mind that NIO is targeting the premium segment of the EV market in China, which enables it to enjoy significantly better margins than other local EV manufacturers. This added profit can then be used to reinvest back into the company, thereby reinforcing a positive cycle for the financial strength of the company. A great deal for us NIO stock investors. Most people living in urban China do not live in a big house with their own garage. For customers that have to charge their EVs, it is a problem in every major city in China. Unless this problem gets solved, China will not be able to reach its target of EVs taking up 25% of the market share of the total automobile market. NIO has the perfect solution: battery swap service. NIO customers drive into a NIO battery swap station, and in less than 5 minutes they are able to swap out their depleted batteries with a fully charged one. Convenient and time efficient. Another awesome service released by NIO is the battery as a service feature. NIO customers in China can buy their EVs without a battery and then lease the battery on a month-to-month basis. thereby lowering the initial cost of buying an EV. Investors need to keep in mind that the battery is the most expensive component in an EV, which drives up the price of an EV compared to a conventional car. NIO just solved that problem. Surely a great news for investors in NIO stock because it will help to drive up sales of NIO cars in China. Based on the factors that we just discussed, ranging from production capacity increase, a fresh capital raise, to innovative services introduced by the company, it seems like NIO stock will definitely continue its upward trajectory. Our projection is that the stock will hit $100 sometime in 2021, which is great news for us investors in NIO stock. We will be making more exciting NIO stock analysis videos in the coming days. Please don't forget to subscribe.